All right, good evening, everybody, and thank you so much for tuning in for our Q2 Park City housing market recap. That's a lot of words to say, and I will be sharing a lot more words with you. For those of you whom I've not met, my name is Karen Stone, and I am a realtor here in the Park City area, where I have been selling homes and helping buyers for the last 6 years. I do come from New York City, where I got in the market. I started selling real estate there in March of 2008. So you can imagine I was thrilled to start selling real estate during one of the best markets ever. And because of that, I have learned a lot about stats and really looking at the real estate market from the macro level and how it directly impacts what's going on here in the Park City area. I have been doing these calls quarterly for the last year and a half or so. It all started when I personally, I'm gonna mute you, when I personally got my home valuation. As many of you probably got to me that way. And I realized that my home valuation was too high. I was going to appeal, and I posted on Nextdoor, I'm going to appeal my home valuation. If you want to appeal yours, let me know and I will run comps for you. And that started a snowball effect of helping out members of the community all for free with no expectation other than maybe you would leave me a nice Google review. And to date, I have helped over 650 Park City, that includes Summit County and Wasatch County, homeowners to appeal their home value. Some of them have led to sales, which has been great. And this year, I already have about 130 requests. So I am definitely chipping away at this. For those of you who do not know, the appeals are the window just opened August 1st, and the appeals, if you want to appeal, are due September 15th. So if you'd like for me to provide you with a complimentary comp report, I would be happy to do so. But the point is that what I realized is I could help people beyond just that 6 week window and really be a resource and talk about what's going on in the market in general. Because the reality is, your home valuation that you're asking me for today, based on values as of January 1st, does not really tell you anything about the market. And if you're watching the news and you're looking at the headlines, whether it's KPCW or national news, you are likely missing a lot of information about what's going on, of what the true headlines are and what the true facts are. So for tonight's meeting, I want to give you all opportunities to ask questions. My agenda is fairly simple. I'm going to be discussing the macro housing market. I pride myself on really diving in, and this really comes from my New York experience of really understanding what's going on a macro level, on a national level, to understand exactly how that impacts us here in Park City. And you might be thinking, like, New York, Park City, how do they correlate? The reality is that a lot of people, as you know, come from New York City, come from California. And so it's important to know what's going on in those markets as well as on a macro level, because all of it directly trickles down to the second home market. And just like New York, which was a very specific kind of market, Park City, being a resort community, second home market, is the same in terms of its obscurities. And so I realized early on that I really needed to dive in to really uncover a lot more data to tell a story. Because unlike New York, where there's 1,000 sales in a month, we're looking at less than 3,000 in a year. So as I mentioned, I want to leave this open. If you have questions, please feel free to drop them into the chat. I'm going to be sharing a lot of stats with you. I am recording this. You can watch it at a later time, and feel free to email me accordingly if there's anything I can do to help. So let me break right into my PowerPoint presentation. I will do my best to not bore you too much with this, and to manage uh, all of the requests for people coming through. Let's start the slideshow. Okay, there we go. Let me minimize this. Okay, so there is where we are today. Okay, so as I mentioned, first we're going to talk about the macro housing market. I did pull out a little bit of information as well about the mountain and housing in the mountain region. Then we're going to take a deeper dive into the Park City market, and I will open it up for Q&A as well. So let's first talk about the macro market. You may have heard a few things in the news. You may be scrolling and looking at some headlines and maybe living in fear, maybe living in confidence, whatever you're doing. My hope is that you live in a place where you are educated and can understand what's going on a macro level to when you're thinking about making decisions. So, as we know, inflation has been unfortunately going in slightly the wrong direction. We were making some good progress. So we have the headline inflation is 3.5%, which is down from where we were in May, which is great, right? Core inflation is also slightly down 2.6%, which is down from 2.9, but overtaken by the conflict-driven oil shock. So the good news is that just like in 2008, where the housing market was directly impacted by by mortgages, which was the housing market, right? We were causing it ourselves. Right now, we know that there are very clear things going on in this world that are directly impacting inflation. As we know, we've got the war in the Middle East, which is directly leading to the increase in oil prices, directly impacting inflation. The feds are definitely leaning from what I've been able to read, and I look at these probabilities pretty much every week, if not multiple times a week. I'm watching what is the probability? What do they think the feds are going to do with the rates? And obviously that directly impacts mortgage rates. We did see we were on a great path with the mortgage rates. They were starting to drop in Q1. We go to war and then they start to go up. So they fell to 6.36. At one point this year, we were actually under 6%. But we're just talking about Q2 here. So we dropped to 6.36% in mid-May, climbed back up to 6.66 today. They're hovering around that 6.8, 6.9 as of early August. However, we do have to look at the bright side. I don't want to be the bearer of all the bad news, but we are still down year over year compared to last year. But that number is unfortunately rising from what I've been able to tell. We do have a job market report coming out, I believe, tomorrow, and another Fed meeting next week or the week after. All right, let's talk about. I know that I told you I would talk about the Park City market later, but I do want to show you this chart, which a lot of my charts are provided by Rick Klein. You may know him as one of the writers of the Park City Follies. I don't know if he's ever acted in it, but I definitely know he's been a writer. But he is in the mortgage business, and so he provides a lot of these stats for us as a community, the brokerage community. So this stat generally shows exactly what you might predict is that as the mortgage rates start to go up, the sales tend to go down. So you can still see that even though about 50% of the inventory and our sales are cash, those that are financing tend to continue to stay sensitive to the rates. So we will see as rates continue to go down. What we generally see is rates go down, picks up, uh, interest picks up, supply and demand. Hopefully, we get into multiple bids, prices increase, etc. That's kind of what we're expecting to see. We just have not really seen it lately in the last year or so. Let's talk about where we are on a national level in terms of whose market is it? Is it a seller's market? Is it a buyer's market? As you know, 2020 and 2021, depending on when, what time of the year in 2020, it was very much a seller's market. Inventory was way down on a national level, including here. And that was very much a seller's market. And the reality is that is just not sustainable. So what I like about this chart from Realtor.com, it shows that over 70% of the top 100 metro areas are experiencing a balanced or loosening towards a buyer's market. Buyers have not been in this position since 2018. Is this cause for us to say, "Oh my gosh, the market is crashing"? No, this is just a normal cycle of where the market, flows, right? And interest rates obviously have a huge impact on this. But the good news is on a national level, and I am very heavily connected to agents across the country. In fact, I was just with 5,000 of my closest friends over the last 3 days at a conference in Anaheim, having conversations with everybody from the smallest towns in Florida to Beverly Hills, and having these conversations about what they're seeing. Obviously, everybody's a little bit different. But you can say that at least this is the headline that's stating that we are getting back into a balanced or loosening market. And in some parts of Park City, it is a seller's market. In other parts, we're definitely seeing that buyers have a lot of options. We have to talk about luxury in particular because we are in a luxury resort market. According to the stats here, according to Redfin, which I like to pull from all different sources, the luxury market, we are seeing increases in home prices, inventory falling, number of sales slightly going up, which tends to tell us that the luxury tier is accelerating. It's just not doing so quickly. And there are still buyers out there in this luxury space. So, according to the median US luxury sales price, uh, the median US luxury sales price is 1.37 million. We all know that that is not considered luxury here in the Park City area. Our numbers are generally around that $3 to $4 million price range. I'm going to break that down for you. But I wanted to show you exactly the impact of the luxury homes where we're seeing a decent amount of growth compared to the non-luxury year over year, which only saw about a 1.5%. So definitely price growth has increased a lot more in that luxury sector. Let's talk about the resort towns. I always like to look at what else is going on in this general bucket, right? So everything from luxury. I'm very connected with aviation and art and cars and luxury goods. I go to these conferences 4 or 5 times a year, actually based out of New York, with people from everywhere from Rolls-Royce to LVMH, hearing what they have to say about the luxury market. Because the reality is a lot of these buyers who buy goods, goods and services in the luxury space are also our buyers here in real estate, here in Park City, sorry. So what we are seeing is that there is a cooling in the seasonal and vacation markets. Specifically, and I don't think I pointed this out on this last slide, but we are seeing that most of that the most the softest, if you will, markets are in the Western region. So that is unfortunately us. But we are seeing that the seasonal and vacation markets have been slowing a little bit. It's not because these markets are crashing, they're not attractive anymore. It's just that we are in a second home market. So this is a want, it's not a need. So the consumer is saying, I don't really need it yet. I don't, unlike during COVID, where we saw this mad rush of people really expediting their timeline in terms of getting into this Park City area for the lifestyle and moving their family. Now they're taking their time. They might be settled where in a place where they're raising their kids. It doesn't quite make sense for them to buy that second home. Maybe the math ain't mathin'. The rental market is a little bit, whatever it might be, depending on where it is. But as we know, when the rates go up, it makes it even harder to pencil. So that is why we are seeing that second home buying activity dropping a bit. And as I mentioned before, the Western region posted a 0.8% year over year price decline, according to the National Association of Realtors, which was the only US region in negative territory. The question for us here in Park City is, does this national resort market cooling story actually apply here, or is Park City the exception? Which brings me to the next slide, which is where I went to the Institute for Luxury Home Marketing and pulled some stats there to see exactly what's going on in some of the other mountain towns. So as you can see here, Park City actually has one of the, and again, this is kind of headline news, so please take this all with a grain of salt. But we could see that Park City had an average days on market of 10, which again, we have to really look at, and I will be breaking down the new construction. But when you look at markets like Telluride with the prices, the median luxury sales price at 6.7, taking 311 days to sell, which is really in a buyer's market. Eagle, like Vale, also in a buyer's market right now. I just heard from an agent in Vale today who, just checking in with me. He wasn't at this conference, but he's a friend of mine. And he said, "What's going on there?" And I told him what I was experiencing. And he said he had homes in all different price points, ranging from around 1 to 3-ish million, including one at the Ritz-Carlton. And he said it's just been cricket. So I'm not surprised to hear that when I read these numbers. As I mentioned, the Park City area, the median luxury sales price is almost 3.5 million. It's saying that we're in a balanced market. I will go into that in depth in shortly. Breckenridge, also a balanced market, slightly lower price points, taking a little bit longer to sell than here. And Lake Tahoe at 1.5 million, probably because it's one of the easiest markets to get into from a pricing standpoint. So definitely still in a seller's market. And when you really consider all of these areas, I don't have to live there to know that Park City is one of the only ski resorts that is expanding. And I don't need to tell you that if you've been driving on the roads lately. So, what is making Park City stand out? Why, what was the headline in the last quarter? So, I'm going to break these down accordingly. But we had a pretty big boom in terms of land sales, genuinely surging right now, which we like to see. The absorption rate, I'm going to break that down as well, loosening more slowly than our peer resort markets. So that is also showing a sign of relative strength. And I'm going to break that down by price points and area. And then, of course, we have our new construction. So the new construction in around the Jordanelle area, specifically, is really impacting our headline news, our overall market. I understand that that's likely not where all of us are in terms of who's watching this and who's on this call, but that we cannot avoid that conversation when we're talking about the stats. I wanted to pull this chart to give you as an example of where the sales are happening, right? If the median sales price in Park City is 3.5 million or so, let's see if that's where they're happening. And this chart actually shows last over the first 6 months of the year, we had 433 sales. And as you can see there, price tier is at the bottom and the sales per price tier is on the right. A majority of our sales, pretty much half of the sales, are under $2 million. Think about that. Half of the sales are that happen in the Park City area. This is all of Park City, Park City, like j j proper, if you will, Snyderville Basin and the Jordanelle area. I'm not including Heber, and Camas here. So most of them are happening under $2 million. A few, then you've got the 2 to 5 million. And as we go up, you see that there are fewer sales happening, but there are still sales happening. On any given Wednesday, every other Wednesday, depending on the Wednesday, we do broker open house tours. And I think it was just a few weeks ago. I think there were 4 or 5 properties in the colony alone. This is your chance to see the colony if you've ever been curious. Um, and I mean that number in 1 week is pretty incredible. There's also a lot of really high-end properties. One for 33 million just hit in Park Meadows, 46 million in Pinnacle and Promontory. These high price points are definitely hitting all over Park City, and a majority of those, 20 plus million are around Deer Valley, East Village. Let's talk about volume. Where are the sales happening? Volume is if we take all of the sales that have sold, what is the cumulative amount, like value of all of those homes? So we have seen, in case you can't read it, the blue section is condos, the red is single family homes, and the yellow is vacant land. So we did see that the condo, I would say that this is the headline that you're looking for. The condo market slowed. The condo market was hot in Q1, and then they Founders Place, they had a lot of closings there, and then all of a sudden we see this huge dip in the overall condo market. And I'm going to break down by neighborhood. So the headline for condos says condo market has cooled. I will say that the condo market, especially if we're looking at those price points, under $2 million, that's a huge chunk of the market right there. So as we're talking about overall headlines and connecting the dots, if the condo market cools a lot, that directly impacts the overall headline. The single family home was relatively flat, only up to 2.5%. So not a huge number, but at least there's upwardly movement. And then vacant lots was up 29%. So that is truly the headline. And as I have here, unlike Q1 2026's third highest quarterly volume ever, Q2 reads as the market settling into a healthy equilibrium with a different mix underneath the surface. That's exactly what I said about if one or two of these condo buildings, or like the Marcella area that has all these single family homes with all the lot selling, that directly impacts these numbers. Talking about inventory, this is probably one of my favorite stats, and favorite charts, because it literally shows us just how seasonal the overall market is. And I know that you might not be able to see all of these numbers, based on the category of condo, single family home, and lots. But you can see here that there's like, it looks like a wave, and there's a wave every single year where inventory goes down during the winter, and then it shoots up during the spring and summer, and then it comes back down in the fall. And we have been waiting to see this like consistent wave, just to see like what is our new norm. Um, and according to this, there were 1,053 listings as of July 1st compared to
Update from Karen
1,021.
Stone.
Hello.
I think she came by here
Hold on one sec. I'm
6 months.
gonna mute. Okay. Um, sorry about that. So a 3% increase year over year. Compared to a year ago, condos were up 17%, single family up 3%, and vacant land was down 38%. There's a lot going on here, and I can show you the stats and the charts, but I want to wait for a little bit. But I just wanted to show you that the inventory overall, we are clearly not at our peak. We are getting closer to it. I checked the MLS today. We're at about 1572, I think the number was 1575. We haven't broken 1600 yet, and that's in the Park City MLS. Um, all properties. So we're inching our way back up there. But as you can see now, compared to pre-COVID, there is like back then you could see exactly what was going on with the condos and single family homes and the land being relatively equal each quarter. Now we are seeing more condos hitting the market. Developers are building a bigger mix of condos versus single family homes. The buyer pool is changing, the buyer profile is changing, the buyer wants different things. And so they are hopefully building for what those buyers want and planning for the future. All right, take a second and just look at this chart. What I've broken down here is the condo it might say condo summary up at the top, but let's just look at total market single family home in the middle of the chart, right where you see the light blue, the green, and the orange. So single family homes total quarter to quarter, single family homes 301 in Q2 of 25 versus 319. Okay. The units increased 6%, the volume went up 2%. What that shows us is exactly what I told you, relatively flat. The condo market, 208 units last year compared to 203 this year. Volume relatively on par, but with, relatively flat, down 2% for units and volume. And land 101, and this is the highlight, this is the headline, right? 101 units compared to 147. So last Q2 versus this Q2. So that's where we see the units going up 46% and the volume going up 74%. Just some things to point out here is where are all these sales happening? Where are the biggest headlines? I'm looking for what's in red right now and where are the opportunities? It certainly looks like um, the Park City, basically Old Town, Thames Canyon, Thames, Erie, Prospector areas in Park City, Greater Park City. They saw an 11% change in the quantity sold. Why might that be? I think we haven't really. This is just condos total. I don't think we've seen the rush from Sundance or from the slow winter yet, but that's probably a good number of them if I had to guess. Snyderville Basin is always a hot spot that has a lot of sales going on. And then the Jordanelle, obviously, that is pretty much all black there until you see the average price come down and the median price come down as well. But the quantity sold went up 19%. So that's a pretty big number. So again, that's quarter over quarter, year over year. As you can see there, again in the middle with the blue, green, and the orange, single family homes, 1,245 units sold, and compare last year compared to 1,341. Volume definitely impacted. So units went up 8%, volume went up 15. Condos 985 last year compared to 847 right there. You see it in the numbers as these new buildings close, we that number goes down. So there's a whole different headline there of existing homes versus new construction as well. But you can see that the condo market, the volume also went down about 7%, and land 444 last year compared to 507 this year. Again, year over year, with the units going up 14% and volume at 26%. I want to point out something about land here, which is this slide. So land tends to lead the broader housing market. So when you see people buying land, unless they're buying it just to like get a golf membership, which we definitely see that happening, What that generally indicates is that people are probably not finding the homes that they want. They have options, or people are saying, I'm not finding what I want, and sellers are saying, I'm not getting what I want, so I'm going to pull it. So buyers are saying, I'm just going to build it myself. So what that means is we can predict that, let's just say, with it, what this takeaway is saying is that within 12 to 24 months, they're going to flip these, right? Within a few years, possibly, 3 to 5 years, or maybe they'll buy it, they'll build it, and then they'll sell, right? Like putting a spec home. I've seen quite a few of these homes in the hideout area. So that's going to directly lead to more inventory as well, right? So that's the beauty of this market is it's forever changing, right? They may not be making more land, but you can tune into whatever media outlet you want and hear that there's a lot of conversation about what's being built, how much water, all of the, politics around it. But the goal, like they seem to have no problem getting Deer Valley East Village through. Obviously, we understand there are obvious reasons for that, but the county is still not quite certain, and they're still fighting for, do we really want to add all this additional housing? So for those people who are buying the lot, putting on the home, that's going to directly lead to inventory a few years from now. Where is all of this land? A majority of it is in the South Jordanelle. That is the Mayflower area. That's Benlock Ranch area. Promontory continues to lead with the land sales. 21 sales at $33.3 million, up 320% in units and 615 in volume. I mean, that's just incredible. The median lot price is 1.5%, million, sorry. So that's up 66%. And then Snyderville Basin land, that does include Promontory, just so you know. But you still have lots in Summit Park and Silver Creek and in other areas, in Glenwild. All of that is included in that Snyderville Basin. So that's making up a huge portion of the sales as well. All right, let's talk about general inventory and the sales volume. Again, this was kind of a repeat of what we saw on a few slides ago. But we can see that a majority of the sales volume is coming from Snyderville Basin, keeping in mind that that does include the Colony and Promontory. Okay. Um, and we always kind of have a bet at the board. Is Heber winning or is Camus winning? This last quarter, it was clearly Heber. So this is a normal thing, as I note here in the takeaway. This is a solid, not very spectacular spring selling season by unit count. It continues to trend relatively positive, despite some of my more negative numbers that I've been showing you. All right, this is the condo market. The most important headline here is that the market did not fall apart. Okay, so just because that headline says condo market softens or is crashing or whatever you might be reading, keep in mind, as a journalist, if it bleeds, it leads. So they want it to be bloody. So here we see that the Q2 volume is that dark blue, the lighter blue is the Q2 sorry, Q2 25 compared to Q2 26. So you could see exactly generally like supply and demand. Where is the supply and demand, right? So we have more inventory in Snyderville Basin, and that is why there's more volume, right? A lot of, and as again, specifically, this is condos. Absorption rate. Um, Absorption rate is defined as if no more homes hit the market, if they just turned off the MLS and said, all you have to sell is whatever's on the market today, how long would it take to sell? We are at the highest level, congratulations, since summer 2020 at 8.7 months. That is a high level. The NAR, the National Association of Realtors, from 2013 to 2019, or let's go back to COVID times. 21 to 22, we were barely at 1 to 2 months. What did we have then? We had a frenzy. It was a seller's market, not a lot of inventory, clearly, and a lot of demand. Pre-COVID normal was 2013, as you can see here from this chart, to 2019. Again, pretty predictable, was 7.2 months. Average for 2025 was 6 months, and the NAR the national NAR absorption rate is 4.6 months. So we are definitely moving slower than the frenzy years, but still within a functioning range. Again, I think, which we talked about with the second home market, I think we are seeing that, like we are seeing that reflected in these numbers. I'm working with quite a few sellers right now, and the phones are a bit quieter, the open houses are a bit quieter, the requests are a bit quieter. It's happening over the board. And if you have time on an average Wednesday, I think 2 weeks ago there were 80 homes on tour that day on a Wednesday. And there's beginning to be so many or there are so many at this point that they need to do them over 2 days. So what that just says is that, like, buyers, if I had to summarize it, buyers have options. They're taking their time. They're considering not only what's currently on the market, but what might be built that might be newer, might be better, might have better views. And they're really any buyer that I work with, and I'm like, if they don't have a specific area in mind, I show them all over. And the reality is, like, for under $1 million or under 2 million, like I pointed out, they can really get a home in one of the 3 bedroom condo flats at Mayflower Lakeside overlooking the lake, as well as the Deer Valley East Village. They can get a small townhome and, an older townhome in the Old Town area. So the buyers are really, what they're really deciding is, do I want the new? Do I want to do work and get the location? The good news is they have options at this point. This um this chart I find very overwhelming, but I find it really insightful. The chart on the left just shows you the absorption rate in months based on price point. Rick has done an incredible job of showing us where the median is and what happens when you price at the median, below the median, or above the median, right? So the absorption rate, as I mentioned, is about 8.2 months in town. Okay. And this is as of June. So in town, meaning everything from the White Barn to through to the Deer Valley area. So from the McPullen Barn to the Deer Valley area. So condos under 2.3 million are taking that the absorption rate is 9.8 months. Over 2.3 million is 6.5 months. This says that if it's lower price, it's taking longer to sell. You might be scratching your head on that. If it's lower price, it's taking longer to sell. Snyderville Basin, same thing. Under $965,000, again, that's the median for a condo, is 10 and a half months. Over 965 is 9.4 months. That does not mean days on market. But you can imagine that what this says is that there's just more inventory. So you assume that the days on market is higher. So I've been working with a lot of sellers lately who have said, why isn't my home selling? Like, why is it taking so long? They want that frenzy from 21. That's what everybody is expecting right now, right? Everybody's expecting that their home is going to sell. And I'm not going to tell you that they're not, because I have certainly had multiple sales this year that have taken 4 months and others that have taken 4 days. So it really comes down to, are they finished well? Does it have a view? Is there anything special about it? Honestly, right now, what we're seeing is, if there's nothing special about it, it is all about price. Price is your offer to get people through the door. This is not the market, at least in this price range, right? As you can tell, if you're below that, that median, this is not your market to be testing. And I'm talking every $50,000 matters, right? I'm not talking a $10,000 drop. I'm talking ensuring that you are below those benchmarks that people are searching on Zillow, right? If they're searching up to $1 million, don't price it at 1,050,000, right? That's just poor strategy in general, because then you really are eliminating everybody who's only looking up to 1 million. But this is my point is that this is just not the market to be testing. The market, I say this every quarter, the market will not lie. If it's underpriced, I promise you, the market will tell us that it's underpriced and you will get multiple bids. But this says this key takeaway here, the price tier no longer predicts speed the way it used to in the condo market. The price tier no longer predicts speed the way it used to in the condo market. So price is not the only thing. Condition and, quite frankly, marketing are also very real and very important. So that was condos. Now we're in single family homes in town. This is actually the total reverse. So under 3.8 million in town for a single family home is 4.4 months, and over 3.8 million is 11.2 months. If you have a home that's under that 3.8 million, this is your market. Anything under 2 million at this point, at least in the Snyderville Basin, as you could see, anything under 2.4 million is 4.7 months, compared to over 2.4 is 7.8 months. I know that this can seem a little bit overwhelming, might not make a ton of sense to all of you. I always have to, like, I mean, he literally breaks this down by, all of these areas in addition to Heber and Camas, and eventually I'm just like so overwhelmed. But what you can see here is pricing is everything. So if you're under that price point, you have to consider how long might it take? Is this the time to be selling? So this is what this shows. This confirms the condo reversal on the previous slide is a condo specific phenomenon, not a market-wide shift. I want you to take that with you tonight. So I know that overall absorption rate might seem really high, but as you can see, it truly is price point specific and product specific. Okay. This one I love because this one brings light, shines a light on a lot of, like, how does this all make sense? So in town, the condo market, this is the new construction percentage of listings and sales. So in town, the condo market, we definitely have there are lots of condos there. 164 of the listings were new construction, which makes up 8% of that market. The total sales, 241, which make up 13% of that market. I'll let you read through this. One of my favorites is probably, and the one that I want you to focus on here, around the Jordanelle, the condo this listings, 42% of the listings and 60% of the condos and 60% of the single family homes are new construction. And it's basically 50-50 of new construction versus existing homes. So this is really impactful if you know people in, like, Deer Mountain, in Deer Vista, in that shoreline area. Like this is why, as I do a lot of sales over there, just by chance, I tend to run a lot of comps for people over there. They find me. And I definitely feel this, like, should I sell now? Because what's coming on the market? I just recently had a listing on Shoreline Drive, and it had a beautiful view of the Jordanelle. Not every home there has this big open view condo. We thankfully, we listed it at around like 1,475. We closed it around 1,495. Within about 4 days, we had that. But it had the view, right? But the people who owned it, they took a hit. They bought it in 21 or 22, and they took a hit. So they sold at a loss. I'm doing another one like that in Wasatch Springs right now, where he's selling at a loss simply to get the cash out. he's making plenty of money on it. But he's losing money. Like he's not building equity. So he's saying, let me get out now and go put the money elsewhere. I don't know where he's going to put it, but a lot of people are thinking maybe I'll just put it in the stock market. So I think I would suggest like talking to your financial advisor and about proper planning. Because I mean, I'm in that boat too, right? I'm sitting on a condo. I have a decent amount of equity in it, but I also have an interest rate that's under 3%. So I'm like, well, I want to get the cash out. I want to go turn it into another property, but I don't want that 6%, right? Or 6.5% rate. Okay. Last point about new construction is what this is telling us is that buyers are paying a real premium for the turnkey product. And the existing home sellers there and in most places are facing the stiffest competition in the market. So if you know somebody who has a home and they're struggling to sell right now, and maybe a $2 million basic home that might need to be like torn down and something needs to be built for $2 million, they can go. What this is saying and what we've been seeing quarter over quarter is that buyers are saying, I don't know if I need to be in those prime Park City areas dealing with traffic on 224. I'm willing to go out to the Jordanelle, to Heber, to Camas, not too far out. I'll be closer to Deer Valley East Village. I'm willing to get the newer turnkey compare versus having to do work and maybe, getting the lifestyle. So are they picking finishes and newness for over lifestyle? That's just a question that we ask every buyer at this point. Pricing, here's a good news. Pricing, we are still seeing, as you could see from this chart, you don't need to zoom in much more than this because every year we have a lot of noise, but we are seeing that prices annually are increasing around 7%. So if you're hearing anybody in the media, that if you're reading, the press saying that prices are up, or maybe you got your tax your market valuation and there's that 7% number. Chances are it's not that number and it's not based on this chart. But what we are seeing here is that Park City continues to be a solid place to put the money to own and to watch and to watch our home values increase. And I just think that that'll get better and better if as we get closer to the Olympics. As long as we don't have another winter like we just had, which I'm sure we will at some point, but hopefully not this year. Okay. Um, here's just a little bit of a summary. The land surge is very real, so pointing towards strength in the for the market next year. Single family home rolling 12-month volume is up 15%. Condo comparison might feel very off. We have a lot of new construction that's either closing, about to close. A majority of that is over by the Deer Valley East Village area. But we really have to look at that, like what percentage of the market is new construction overall. I think we see about 30%. We obviously are watching all the risks. We're looking at what's going on in the Middle East. We're watching what the feds might do. There are definitely reasons why they might need to increase the rates according to the charts that I'm reading. It looks like there's about a 50+% chance that they will increase the rates at the next meeting. Um, and then we have of the very real challenge of the insurance costs and fire risk reclassification. So it is getting harder to get insurance here in the Park City area, which is directly impacting sales as well. I'm not personally experiencing that with my clients, but I definitely am hearing that throughout the market. So I think we all just need to be aware that if your buyer is somebody who will need to, get a mortgage, they're obviously going to be looking at, can you get insurance? And if they can't get insurance, they likely can't buy the home. And of course, we are looking at job reports as well. And to summarize it all, demand have softened on the surface, but the headline is a little bit more, there's more of an interesting story. Buyers have not left. They've just shifted, and as I mentioned, they have options. They're looking at where they can buy, not just here in Park City, but they're looking at other regions as well. It's the total closings were essentially flat, which is like okay, right? If we don't have anything major to share, like that's okay. It was the product mix, not the buyer appetite. I think we need to remember that. We cannot make blanket statements about these buyers. Inventory and absorption. Inventory is going up. The absorption rate is going up as well. And I think that once we get the rates to come down a bit, then we'll likely see that absorption rate come down. That's really going to have to happen in order for that number to come down on a national level as well. Prices overall have held, roughly a rough appreciation of 9 to 10% year over year. Not too bad. Overall appreciation is still running nearly twice the national rate, so that's great. And then we, of course, need to discuss the new construction accounts for more than half of all home and condo sales, especially in Promontory, it's over 30%. And this, what we're seeing now, um, let me escape. Let me get out of that. What we're seeing now is that for listings right now, we are, as a strategy, I always, we look at the comps, we look at what is sold, but we're also looking at what is actively on the market, what is still sitting, what hasn't sold. We're looking at the appetite of the buyers today, not the confidence of the buyers last quarter, last month, last year, whatever it might be. So if you're considering selling, these are just things to factor in. I am happy to do every call that I do a little digging for anybody who wants. I will run the stats specific to your area, and you can see what's going on in your specific area. If anybody wants to chime in and put in a request, I'm happy to do so. I'm going to end the recording here, and then I'll take that off the next. Stop recording.